The COB is brought to you by Pepperstone, trusted by traders in over 160 countries. From Barangaroo Studios, here's what you need to know about the day in business and finance.
Hello and welcome to the COB on this Friday afternoon, the 26th of April. I'm Nadine Blaney, and it is good to be here with you, even when we're experiencing, such a sharp sell-off here locally. I've got to say, the ASX is significantly underperforming our regional peers, down by 1.6%. Now the curtain has officially come down on the CIBO Australia Index. Really, lackluster performance. I mean, that's probably even underselling it a little bit here today. We've had conversations all day on ausbiz about whether or not the RBA will, in fact, have to hike going forward, what that may mean for, your investment strategy, and also how it compares to what we're expecting to happen now around the rest of the world. Of course, U.S. data shocked overnight with a significant slowing in growth there, along with very sticky and rising inflation. So some calls for, markets to be on watch for a stagflationary environment. I'll be chatting with my guest, Shane Oliver from AMP, about that in just a tick. So yeah, it was certainly a stock swoon for the ASX today. One thing I haven't mentioned so far is that we did hear from the Bank of Japan. Now, the Bank of Japan standing pat on rates. There were some idea that we could see some sort of a rate rise coming through in Japan or some sort of signaling on that front. But it does say that it expects to see inflation remaining near target, and so it's sticking with its ultra low rates policy. Now, we also are keeping an eye trained on U.S. earnings. After the bell in New York last night, we did have Microsoft and the Google parent company Alphabet reporting. Alphabet paying out its first ever dividend and share buyback as well. And shares did really well after the close. I had a good chat earlier today with Chris Weston from Pepperstone, who flagged that it looks as if the bulls are in charge of the NASDAQ once again. Now, I know that might seem counterintuitive because, of course, we have had some pain being expressed in some of, the big companies, even Meta, for example. But yeah, when he was looking at the chart, so you should go back and listen to the interview. It's up online, ausbiz.com.au under the trade. You can hear Chris talk about why he reckons the bulls are in charge of the NASDAQ. And don't forget, U.S. earnings continue next week in the big tech space as well, with Amazon and Apple. We also get the likes of, McDonald's comes to mind, Eli Lilly next week in the United States. So yeah, lots to help guide that part of the market. Here today, we've got to talk about some of the sectors. All sectors were lower, and that included the real interest rate sensitive areas of the market. So check out Goodman Group. I mean, it lifted off the lows today, but down by close to 2%. Center off by 2%. Charter Hall off by 2.5%. Elsewhere, National Storage REIT down by 3%. So really big falls there. Overall, the sector was down about 2%. We also saw selling in the telecommunications services. So this sector was off by 1.7% overall. So even some of these more defensive areas of the market did suffer today. And industrials, the worst performing sector. Transurban down by close to 2.2%. Of course, if rates stay higher for longer, or if we do see an interest rate hike even, that could negatively impact a company like Transurban. And some losses being seen. Downer EDI, for example, off by about 5%. The best performing sector, if you want to put it that way, was information technology, infotech here locally, but it too was negative, down by about 0.5%. Now, if we're looking for some good news, look toward ResMed. Operational efficiencies, improving gross margin. I chatted with Mick Farrell, who's the CEO of ResMed, and he was just really talking up the draw of ResMed's technology to customers. Yes, there were operational efficiencies that were made, but he just sees demand continuing to go strong. Revenue is up 7%, income was up 25%. And interestingly, he talked about a mega trend, apart from the weight loss drugs, the consumer tech, wearable tech as being a real driver, he reckons, to customer growth for ResMed in the coming years. So that's up online. If you'd like to catch up with that CEO interview, we'd love you to do so. At Newmont, if we're focusing in on the good while we're here, it's up by 13%. Came out with a quarterly, of course, a dual listed company, and that's where some of these quarterlies are coming from, of course, with U.S. earnings season in mind, and given the price of gold and what we've seen with the price of gold, it put in a stellar result, up by about 13%. Kogan, savage selling earlier this week, continuing today. Most senior executives there made $17.6 million selling options back to the company just 3 weeks before that profit downgrade that came through earlier this trading week. Naughty. And BHP was off by 4.6% after lobbying that close to $60 billion bid for Anglo American, which did do some damage to its share price today. And to get some perspective on that, I spoke with Claude Walker from A Rich Life and Luke Winchester from Merriweather Capital on the call.
A lot of people would usually have the view that you would do well to buy off BHP and you do well to sell to BHP. They're often not regarded as at the best of that sort of capital allocation and M&A. So it's probably a little bit of the market. Shoot first, ask questions later until we see some more deals. I suspect this will be long and drawn out, given it's all scrip. But yeah, look, for the program today in a buy, hold, sell, I think it's still just a hold.
Overall, look, BHP, I wouldn't want to discourage anybody from holding that. Based on what I have to say, it's way outside my circle of competence. It just wouldn't give me, even if I did want to get that copper trend and I thought copper was undervalued at the moment, BHP wouldn't give me even enough exposure just to that. I'd prefer just take a smaller position in some probably silly high risk copper producer that's a little bit down in the dumps, and then just ride that if we do get this call on the long term theme correct.
So that was BHP. It was certainly being sold today, but a hold for both of my guests on the call, even though that's not their style of investing. They are into the small and even microcap space, and not looking for too much exposure to those big miners, but there you go. All right, it's a Friday. It's time to catch up with Shane Oliver from AMP. Shane, welcome to the COB. Pleasure to have you here joining us.
Thank you.
The ASX, real outlier today when you look around the performance of share markets around the region. What do you put it down to? We've got all this interest rate talk. We've got a lot of consternation, I suppose, as to whether or not we could even see a hike coming from the RBA.
Well, I think that largely explains it. We did get an initial reaction to the higher than expected inflation numbers on Wednesday. But then, of course, we missed out on trading yesterday. And then by the time we get to today, there's people talking about rate hikes, notably Warren Hogan at Judo Bank. So I think that has sort of refocused the market to some degree. You've seen money market interest rate expectations go higher. I think money market is now pricing in something like a 50% probability of a hike by September. And of course, that's further weighed on the share market here, despite what was a positive lead-in from the US. But I think it all comes back to local interest rate expectations. The market was hoping for interest rate cuts. It's now worried that we might see interest rate hikes.
Are you worried that we might see interest rate hikes? Do you think there's any justification for that?
Look, I don't think so. I am a little bit worried, though, because we do know that after the September quarter inflation numbers last year surprised on the upside, the RBA hiked again in November. We then got the December quarter inflation numbers, which are on the low side, and of course figures for January and February, which were likewise on the low side. But now we've got these March quarter numbers, which have surprised on the upside again. So you can make an argument that given what they did in response to the higher than expected September quarter numbers, they might do the same thing in relation to the March quarter numbers just out. I do think they will probably discuss the case for another hike at their next meeting in a week and a half's time. I think they'll probably also reinstate their tightening bias. That said, I don't think they will hike again. I think the Reserve Bank would put this in perspective. Just bear in mind here that if they revise their inflation forecasts up, which they probably will do, not so much the headline number, which wasn't that different, more the trim mean, it really just goes back to where it was in November. So I don't think there's enough in that to bring on another rate hike. I also worry that many of the things that have protected Australian households over the last 2 years are now running out. We don't have a great bank of people protected by low fixed rates. We've seen the rundown, of course, of the of savings buffers that have been built up. The jobs market is gradually starting to weaken again. So many of those things that protected consumers are now running out. So I think it would be a mistake to then move again and raise interest rates. And then I guess finally, you can sort of make an argument, well, we've got all these other central banks around the world with interest rates somewhere between 5 to 5.5%. We're at 4.35. We're the odd one out. And therefore, we should move into line with these other countries. Well, you just got to allow that Australian households are world beaters in terms of the size in actual interest rates on their mortgages they've had to face. Whereas in the US, the average mortgage rate for the average customer has only gone up 0.5%. And for many of them, there'd be no change at all. So, yeah, very different story in Australia, where the average mortgage rate on outstanding balances has gone up almost 3.5%. So all of those things, I think, suggest the Reserve Bank should wait and see. I'm reminded of a quote from Milton Friedman, or a metaphor where he said that central banks need to be cautious that they don't become like a fool in a shower, constantly tinkering with the hot and cold taps to get the water temperature right, but not waiting for the lags. And therefore they find themselves end up being too hot or too cold because they're not patient enough. So I think the Reserve Bank here really needs to exercise patience and wait a bit longer.
Yeah, you don't want to trigger happy RBA. Okay, so say the market comes to terms with this patience narrative here in Australia. If you look toward US markets, do you get the sense this time last week, Shane, we were talking about a correction? Have we seen the worst of it?
Well, that's a good question. And I was a bit equivocal a week ago, and I think I still will be. I think it's too early to tell. We have seen a good bounce. Earnings to the rescue in the US, and the earnings numbers so far have been good. Yeah, I know Meta missed on its guidance, but Alphabet and Microsoft overnight did very well. And the average stock, I think, that is reported so far, 43% of companies have reported, 81% have surprised on the upside, and consensus earnings expectations are lifting like they often do through these reporting periods. So I think that's all very supportive. The flip side, though, is the uncertainties around the Middle East remain immense. Uncertainties around when the Fed will cut rates remains immense. I noticed in the last week it's sort of been pushed out a little bit further. A rate cut in the US was fully priced in this time a week ago for September. It used to be June, then it becomes September. Now it's not till I think November that it's fully priced in. So it's getting pushed out again. So that's a concern. And I also note that investor confidence, which was very, very high a few weeks ago, has come back down, but it's not yet at the levels you'd normally say this is enough to sort of convince you to buy aggressively. And of course, the last correction we had, July to October last year, was a 10% top to bottom one, which came in several waves. So there's a good chance we may have seen the bottom, but I think you've got to keep a bit of flexibility around that. And I think there is still a risk that we could go down a little bit further from here before we finally bottom out.
Okay, so that gives us some guide, I suppose, as to what you expect will happen. Now, when you think to the big events that we need to keep in mind, we've got US earnings season, to your point, continuing next week. We've got Amazon, we have Apple, but we also have quite a lot of data coming out In the United States, we've got the FOMC, we've got non-farm payrolls, we've got the JOLTS job read, we've got China data as well. But here locally, the retail sales read, you've got to think that will be an interesting one, Shane.
I think it will be, because Taylor Swift's concert occurred in February, and that provided a bit of a lift. The Swift lift, as it was talked about at the time, wasn't a major one, but it did boost things a little bit in February, and that lift won't be there in March. There'll be a bit of a pullback. So we're looking for a 0.2% or so decline in retail sales, but I noticed the consensus anyway still seems to be for another 0.3% rise. But so that'll be interesting to watch. But it's mainly around that uncertainty as to whether there was a lift from the Taylor Swift concerts. I think there probably was, but it certainly won't be there in the March numbers.
Okay. And anything else that you're really thinking of as we head toward this weekend, Shane?
Well, at the moment, I'm still trying to work out whether the latest Taylor Swift album is good or not. I think it is good. There's no doubt about that. But it is requiring me to play it through a bit more. I was hoping for something like a return to Lover, which had a lot more upbeat songs on it, or bouncy songs anyway. Her last 4 albums now have been a bit softer. You've got to listen to them a few times before you get the benefit. But Fortnight's a good song. There are some good songs on there, but it's not as upbeat as I was hoping for. Not like 1989 or Lover.
Yeah.
Interestingly, though, I suspect her audience likes these more introspective, slower songs for some reason, perhaps, and I'm old-fashioned, wanting more bouncy stuff.
Yeah, well, I think too, she's going through phases along with her audience. But
that's fair enough.
I thought when I was reading some of the reviews, people were being a bit harsh, only insofar as, everything is not going to be a smash it out of the park, moment when it comes to music. She can't continually, do you think, Shane, continue be a hit factory one after the other?
No, it's hard. She's done better than most. 15 years I think she's been going for. Actually, I think the first album was 2006, but 17 years. So she's doing remarkably well. And to have so many #1 albums in the ARIA charts in Australia, she just dominates in that over the last decade or so. In fact, over the last 20 years, she dominates the #1 album charts. So I think, well done. And this, by the standards of most recording artists, this is a fantastic album. So you can't hit it out of the ballpark, out of the park every time. And I think critics, I've never really liked critics. Often it seems the albums I like best are the ones that critics don't really like.
So give it time.
People hated Kylie Minogue. The Sydney Morning Herald used to call her the singing budgie, and I thought she was fantastic. But that's just me.
I think we've got to take that word patience from the RBA maybe and apply it to your listening of Taylor Swift's new album.
That's right.
Shane, always a pleasure. Have a good weekend. We'll see you next week.
Okay. You too. Thanks, Nadine. Take care.
Shane Oliver there joining us from AMP. All right, let's get across some of these leaders and laggards. I dare say not a lot has changed since we've been watching all day. Newmont, ResMed leading the charge, Champion Iron, Perseus, and Fortescue as well. There really hasn't been a lot of movement in that list. And on to the laggards. So earlier I was talking about Magellan. I still am not really sure what's behind that near 6% drop. Insignia, Boss Energy, it had a good day earlier in the week when it started production at its project. And Super Retail, I thought, was on the list earlier, and that's a little bit of workplace drama that is going on there between apparently the CEO and the head of human resources, I think it is. Anyhow, we'll be watching that one, and Downer EDI down by close to 5%. In the small end of things, we've got American Rare Earths looking pretty good, up by 16%. But on the flip side, on a day like today, Chrysos Corp. Now, we've got a couple of people asking us to cover that on the call. I'm going to give it another week or so because we covered it fairly recently. I'll see if there's any news, though, and that might make me bump it up a little bit earlier, but it's down by 9% today. Okay, so we talked about, really busy week coming up. Look, tonight we do get U.S. core PCE if that's right. U.S. earnings next week: Apple, Pfizer, Eli Lilly, and Novo Nordisk. And we get, as far as next week, private sector credit, retail sales here locally. We get unemployment in New Zealand. We get building approvals and the trade balance, but it's the FOMC meeting. We'll be parsing all words coming from those committee members, and we get U.S. non-farm payroll on Friday. We're at that time of the month already. All right, so for the local market, final figures for the S&P ASX 200. I know you like to have this repeated: 7,575.9, down by 1.39%. And I just have to get you across some breaking news now, which is that Anglo American has rejected BHP's offer. I'm just looking to get some of the details if I can. That is just one breaking news headline that is coming across my Refinitiv screen. So we did know that there were some rumors that Anglo American did not think that near 60 billion Australian dollar bid was, valuing it fairly. And we now have confirmation that Anglo American has rejected BHP's offer, saying the bid significantly undervalues the miner and its future prospects. So still ways to go on that story when we return next week. I do hope you have a good weekend. Catch up on anything you've missed via ausbiz.com.au. And hey, we'd love it if you could either rate this podcast or tell your friends about us. Have a great weekend.
The COB is brought to you by Pepperstone, trusted by traders in over 160 countries.
Gil.
Oh, hey, Ken.
Here we go.
You still trading?
Pepperstone. Trusted in over 160 countries. You?
Well, I'm still with...
I don't think anyone trusts them.
No, I'm fine with it. Just like I'm fine with my trusty coach. 1980s John McEnroe.
Pathetic! Horrible! 1980s, huh? So, really temperamental?
Keeps me on my toes.
Awful! It's a bit intense.
Be better!
Still fine with it.
Use your racket!
He's just staring at us.
Yeah, sometimes he yells and then sometimes he just stares.
Is he aiming for your face, Gil?
He's fine with it!
Yeah, he's definitely trying to hit you.
Fine with it.
Don't be fine with it. Switch to Pepperstone, trusted by traders in over 160 countries.
Come on, you cannot be serious!
Don't do that.
Ow.